Today we're going to talk about risk-reward ratio. It's a huge part of this strategy because every time we take these trades while extended away from the moving average, risk-reward ratio is always in our favor. What is risk-reward ratio? Okay, very simply put, it is the ratio between the difference of risk of the trade, of loss, compared to the reward of win in that direction, okay, of that amount. So how do you determine the risk reward ratio? This is the same example in the slide, okay? You can see we're here on Dogecoin. This is how the move ended up playing out, okay, when we took, or I took that short back to the 50, okay? As represented in the slide, the risk reward ratio was 6 to 1. Okay, let me get rid of all this. You can see the pattern played out perfectly as projected. After I made the slide, went into the Discord, projected this pattern. Okay, why did I do that? We had the reverse scope extension lining up with the previous green. What had happened was price came up to the dollar recovery, dropped back down, all right, down into the support and resistance area, and then broke out to the upside to the measured move price target. Okay, no, I'm getting a little off topic, but it wouldn't be me if I didn't, right? Measured move price target from the breakout of the triangle almost to the dollar, okay? Back to risk reward ratio. Okay, so you have the tool over here. It was a short position. We entered up here. Let me drag this down. Okay, just coming back to the 50, we had 6%, okay, from the top. We'll go because that's where we entered. Okay, remember I got stopped out twice on this move before it played out. Ended up catching the top the third time. Okay, risk reward ratio was 6 to 1. All right, if we look back at the slide here, risk reward ratio was 6 to 1. Okay, try to get it as close. I'm not sure exactly the numbers, but here we go. Okay, it was 6 to 1. We were targeting the bottom of this green candle where we would anticipate the 50 EMA to curl up, okay, to that level, which it did, right? So, risk reward being in our favor 6 to 1s means I could afford those stop outs, okay? Now, these stop outs that I was stopped out for amounted to a total of around 6%, and then the win that played out amounted in over 40%. Okay, coming down, hitting my second take profit down here at the bottom of this green candle, and remember we are on leverage, okay? So it was 16 times 7, okay? You can do the math on that. All right, and then price came back up and stopped me out in profit above the reverse scope of the move, okay, which was at that time a little bit lower than here, okay, just above there, reverse scope of the move. You can see price came up into it, found resistance, continuation back to the 50, and then back to the upside, okay, so you saw the zigzag pattern here, which would be anticipated. Why? Well, we anticipate when price breaks above the 50 with notable volume, they induce and trap the long positions up into a resistance. At that point, there is a higher probability of retracing back down to the 50 to recover the previous green candles, which it did almost fully here. Okay, wick down, retest the 50, and then it broke. And then you see we're adding in everything video to video, support and resistance flips here. All right, price came up, found resistance at the scope. When it broke, retested support to continue up to the price target and take out the previous high, of course, okay? Pin above, close below, pin above, close below intention, and then we drop, okay? So speaking of risk reward, if you look, risk reward is always in our favor because we are trading reversion back to the 50 EMA, which is always our take profit one, okay, barring the fact if it's a smaller move, it possibly isn't enough, but usually the 50 EMA is a perfect take profit one. Why? We know price is coming back to the 50. We don't know if price is going to break through. Okay, so in a consolidation pattern like this, we would hit the 50, hit a second take profit, hit the 50, hit a second take profit. What would that be? Right? Reverse scope of the move. Again, I don't have to draw these to know exactly where they are because I've drawn about 1 million of them, right? Okay, price continues down. So risk reward, as you can see, extended below the 50, risk reward is in our favor. Extended above, risk reward is in our favor because our risk is predetermined. We know what our risk is. Our risk is the previous high, no more than 5%. All right, our reward is technically infinite, okay? We know we're coming back to the 50. All right, anything after that is bonus take profits, all right? But we lock in the wins. You can see price Extend the chart out. Red candle extended from the 50, back up to recover, almost to the dollar at the 200 EMA. Back extended below the 50, back up to the 50, extended above, back down. Little M pattern here, drop below, extended, up. W pattern here, up to the upside. What do we see, right? Extended above the 50 EMA, drops down, comes back up, and we know what level this is, guys. Okay, we don't even have to draw it. There you go. Reverse scope of the move, of course, right? So price comes up, you're extended. Again, pull the risk-reward calculator. All right, price comes to the upside, pins the high, even if you enter down here. Stop loss above the previous high, 0.5%. The reward back to the 50, 2.5%. You have a 5-to-1 risk-reward ratio, meaning you could technically get stopped out 4 times trying to catch this move here, and then the reversion to the 50 breaks even. Okay, don't recommend being reckless and getting stopped out that many times, but with this strategy we know we're coming into these key support and resistance zones. This is merely just looking at price action and the candlesticks and the moving averages. No extra technical analysis. Once we add in those support and resistance levels, we start to see the trend. We start to get the entries. The candlesticks are the why behind price action. Okay, the moving average, the candlesticks, that's the why and the when. When we add in the support and resistance levels, that's the why and the where. When we add in the support and resistance levels, okay, we get the when, and that's important. Okay, now we have the when, why, and the where. When to enter, where price is going, and why. We have all aspects of price action analysis, okay? So that's simple, just a quick video I wanted to do. Just if you want to start practicing pulling them out, all right, and actually putting them on the targets once you enter the position, all right, or when you're anticipating a position. If you see us, green candles coming into a resistance level, all right, you can do your calculator. I just understand it. I don't know the exact risk reward when I'm taking these positions, but I know it's always in my favor because I'm only shorting when we are extended above the 50 and only longing when we are extended below the 50 EMA. Okay, so that is just a little bit on risk reward. I'll see you guys in the next video. Until then, trade well.